There is a strong held belief by a lot of participants in the market that Bitcoin moves in cycles, that there is a roughly 4-year cycle where you go through a boom of roughly 3 years, then subsequently through a bear market of 1 year, and this tends to repeat. Now in this video we want to look at on-chain metrics to try to figure out whether or not the cycle theory will continue to hold. And we are starting off with this chart here. This shows us how much percent of the entire supply of Bitcoin is at losses. It looks like at the absolute bottom of prior cycles we had 50 to 60% of Bitcoin supply in losses. In other words, this is when there is maximum apathy and when most people tend to give up. When Bitcoin is called a fraud, during those kinds of times it makes sense to start buying. With every single cycle we have seen levels of losses in that range. We haven't seen this yet. We haven't even reached 30% of the supply in losses. Now we saw this once being reached in 2014, then again in 2018, so 4 years later. We had our COVID crash in the middle in 2020 and then again in 2022 our next bottom. So historically this seems to have held. Every 4 years we see a depression like this. That would then subsequently point towards the next absolute bottom of a bear market being in 2026. The question is of course, what happens between now and 2026? Are we going to have another few months of upside? Are we going to see new all-time highs? Or are we going to trickle down all the way until 2026 from here? Now here's another constant across those cycles. The long-term holders got into significant losses at the bottom of the bear market. So we've got the long-term holder cost basis in blue, and when the long-term holders in aggregate are in losses, that's when the current price is below that realized price of the long-term holders. And we can also see the percent that the long-term holders are in losses. So that was at around 50% in 2015, that was at 45% in 2019, and it was at 43% in 2022. So the losses do get slightly less dramatic for the long-term holders over time, but currently we are very far away from this. It seems like we went down in the price from above 100k to now 82k without the long-term holders being in losses at all. Isn't that interesting? We're going to look at this in more detail in a second. So there's the movement by the long-term holders, but there's also always the short-term fluctuation, right? What are the short-term holders doing? And when the long-term holders currently are not in losses, subsequently it must be the short-term holders that are losing here. And that's what's shown in this chart. This is the short-term holder wealth that is held in loss. 90% of short-term traders are currently in losses. Only 10% are still in profit. And here's the total wealth held in loss by all holders. Only 8% is in loss, the rest is all in gains. And just compare this, right? This is the long-term holder wealth, this is all of wealth. Those two lines look very, very similar, as in here the percentage area, right? So it seems like the long-term holders drive the cycles. So let's look at the long-term holders and the short-term holders in one chart. We see the circulating supply of Bitcoin. It's growing over time, right? Bitcoin still gets mined every year. The current issuance of Bitcoin is 0.85% per annum. On average, more Bitcoin gets lost per year than gets mined. So just based on that, Bitcoin's liquid supply is shrinking. What we see here in red, that's the short-term holder supply. What we see in blue is the long-term holder supply. And when it's in dark blue over here, then it means that that supply is in profit. When it's in light blue, it means that the supply is in loss. The same is true for red. So light red means in loss, dark red means in profit. And so again, we see how the long-term holders are not in losses at all. It's all just the short-term holders that currently lost with this drop from above 100k to now 80 something k. A properly established bear market though means that the long-term holders also start to get in losses. So far we've only seen a correction. We haven't yet seen an established bear market just yet. We can also normalize the Bitcoin supply to 100% over time. Then we get this chart here. It again shows us pretty clear waves. When the Bitcoin price is going up, then more and more of the supply gets into the short-term holders' hands. When the Bitcoin price is very depressed, that's when the long-term holders tend to suffer as well, when only 40% are still in profit. Here's a simple aggregated way to look at all of the supply being in losses or in profit. Of course, when Bitcoin makes new all-time highs, then all of supply tends to be in gain. And when Bitcoin enters a bear market, more and more of the supply tends to be in the losses. And this tends to peak at around 40% of all of supply. That's when we tend to bottom out at the absolute lowest of a bear market. Currently, we are only 1/3 of the way. So 20% is in losses, not 60%. Now, what I like about blockchain data is that we can actually get statistics that we don't get for traditional finance. So you can see what kind of investors realize profit, what kind of investors realize losses, and how does this all balance out. It gives us a more refined view of the situation, right? We don't just have to look at price data, we can actually see what's going on under the hood. So check this out. This is the realized profit and loss momentum. So when the price of Bitcoin is going down, as here in 2018, from 20K to 3.5K, there was a lot of realized losses. But at the beginning of that bear market, this was balancing out, right? Some people were still realizing gains and others, the short-term holders, were already starting to realize their losses. And then this tends to flip, right? Then we get net aggregate selling. So the sum of realizing losses and realizing gains gives us the price momentum. And what I find an interesting observation is that in the past, during a bull market, market participants tended to take profit relatively slowly, right? There wasn't too much profit taking. And because of that, the bull market was able to go on for quite a while, right? Bitcoin 100x'd from $200 to $20,000. But then subsequently, it looks like the profit taking happened much faster. And that's then also when the bull market tends to stop quicker, right? We moved here from 13K to 5K. This was the COVID crash. And this tends to be more and more pronounced over time. And especially when Bitcoin hit 72K or recently 100K, we have seen sharp increases in profit taking, something we've never seen to that degree in the past. And I believe that this very quick profit taking is one of the reasons why we don't see the 100x rallies in Bitcoin anymore. Of course, the market cap of Bitcoin is now way larger as well, and it takes more capital to move the markets. But if now, whenever we see a rally, we see that quick of a sell-off, then it is of course hard to create enough demand in time to not depress the price. Now there's an interesting detail with those two profit-taking events. So the one at 72K and the one at 100K. The 72K profit-taking event happened with long-term holders. The 100K profit-taking event seems to have happened mainly from short-term holders. Because have a look at this. This is the long-term holder realized profit loss momentum. We saw a nice run up, a nice profit-taking event over here, but we didn't see anything at the 100K mark, but the market as a whole did take profit here. So it was only short-term holders that took profit here. In other words, people that bought Bitcoin at around 57K. They were happy already to sell at 100K. It is not the long-term holders that are currently depressing the price. This is all selling by the short-term holders, and thus the short-term holders are now also getting into the losses. It's dumping against one another of the short-term speculative capital. It's always interesting to look at reference prices for the market, right? When you buy an asset, say Bitcoin at 50K, and then Bitcoin moves down to 40K, you might consider just continue holding because you don't want to realize those losses and you might believe in Bitcoin long term. But if you buy for 50K and then Bitcoin goes up to 100K, you might consider selling, right? You might consider taking some of the profit and maybe move this over to other asset classes to rebalance the portfolio, or you might simply just consume those gains. And so when we look at the reference price of the entire market, we come to very interesting points. So this is the supply distribution based on different price levels. And we've seen a lot of profit taking of short-term holders between 95 and 100K. So people that bought at the time, they are now in losses. But we've also got a lot of reference prices at the current level. This gives me the impression that in case Bitcoin's price is going up, that we are probably going to see another wave of either profit taking or simply just loss minimization at 95K up to 100K again. Think about it this way. Let's say you bought for a high price, you then get in losses, you then continue holding, then maybe, especially if you're over allocated, if you bought a lot of Bitcoin or a lot of crypto, all you want at that point when you're on losses is just to get your money back. So if simply the price goes back to your entry price, you might already sell. And if the market in aggregate has transacted a lot around this price level, that might mean that in case we go back to the level again, we will see another wave of selling. The same is true for the other way around, right? If we now go back to 60 to 65K, some people might buy Bitcoin again because they've been in the profit. They might have taken some profit. They go back to their entry price and then it seems to be cheap again. They bought before, they made some gains. They feel good about buying at this level. And so wherever there is a lot of trading volume relative to the anchor price, we see support or potential resistance. And here's another way to look at the exact same thing, right? This is the battle of long-term holders versus short-term holders. The long-term holders pretty much dumped on all the short-term holders. Then some of the short-term holders made money with the move up to the 100K. And now all the short-term holders pretty much are in losses. Here's again the supply distribution. So the price is at the bottom. Blue is all the long-term holders. Red is all the short-term holders. And all the losses are currently being held by the short-term holders. The long-term holders are likely going to buy again once we are at around 60K. I don't believe that a lot of short-term holders are buying now. The interest in crypto and in Bitcoin continues to go down. And so I believe the likelihood of long-term holders buying right now is relatively low because they already bought for cheaper. And the likelihood of short-term holders buying now is also not very high because they already got burned. And there isn't that much more interest of new people entering the market. And so I take advantage of the situation by betting on falling prices, especially falling prices of weak altcoins. I believe that this community here is probably one of the fewest communities that still made money during this downturn. I'm sharing all my trades in the premium membership of this channel. So that's down below. It's thebitcoinstrader.com. This is where I share what kind of positions I've got open, where I share what kind of altcoins I currently short, and where I think where there's most gains to be made in this bear market. I actually think it's easier to make money in a bear market than in a bull market. Feel free to check it out. There's also a 1-week money back guarantee. So in case you do not like premium, then just message me within the first week and I refund you 100%. There is zero risk for you. If you got some value out of this video, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you in premium or see you on YouTube next time. Cheers.